Hey guys, thank you so much for tuning into this week's episode of the Real Estate Talk Show, Home Buying 101 with Sebastian Cordoba, Mr. Clear to Close. Guys, very excited about what we're gonna be talking about this week because we're gonna be talking about real estate, but more importantly, are you looking to buy a home? Are you a business owner? Are you an entrepreneur who wants to buy a home? Very important for you to understand what you should be doing before you're looking to buy that home. How should you be preparing yourself to get your finances in order? So aside from that information, I have a very special guest as well, Carlos Garcia, and he's from Heartland Payroll, who's gonna be enlightening us and teaching us how we can do and use payroll to help us get to the next level and help us save some money, be organized, and become bankable. So please guys, tune in, like it, share it. Thank you so much. Guys, so please give it up, big round of applause. Take out those horns because I'm very excited for my next guest. I have Carlos Garcia from Heartland Payroll. Carlos, thank you so much for coming on today.
Awesome, thanks Sebastian. Thanks you for inviting me. Great being here. I'm totally pumped about what we're gonna be talking about today. Today's conversation is really gonna be geared about, as you mentioned, entrepreneurs, business owners, the solopreneur, basically the one-man, one-woman show, running their businesses, and really how to help them, qualifying to buying real estate, whether it's their first property or it's their fifth or wherever.
Yes,
so,
awesome. And Carlos, so thanks again for coming out, man. I appreciate it. So yes, we are going to be talking about real estate, but more importantly, we're going to be talking about how a business owner, an entrepreneur, a solopreneur, how they should be getting prepared with their taxes and their payroll in order to be able to be bankable, in order for you to be able to qualify a home. So before we get into the nitty gritty, I mean, tell me a little bit about what you do. How long have you been in the business? Kind of what's the expertise that you're going to share with us today?
Yeah, absolutely. I mean, I'm a business consultant in the payroll industry for about 8 years now. So I've helped hundreds and hundreds of people get on the books, obviously to either pay themselves, pay their employees, but also for themselves too, because there's a lot of benefits as a business owner or as an entrepreneur in paying yourself on payroll for tax, retirement, and banking purposes and lending purposes as well. So,
awesome. So I mean, that's awesome. So let's get right into it because I think tell me a little bit. What we're talking about is payroll. So somebody who's self-employed, they have tax returns, they have personal tax returns, and they have business tax returns, right? So what's the benefit of having a payroll system, if any?
Yeah, no, absolutely. So I always tell everybody there's 3 benefits to putting yourself on the books on payroll, right? So the first benefit is that it makes your finances much cleaner, right?
Yes.
I mean, Sebastian, how many times have you met an entrepreneur or a business person that, they want to buy a property, they want to qualify for a loan, but I mean, just their finances are all over the place, right?
And you're absolutely correct. So I mean, yes, I've looked at tax returns where in order to qualify, there's a certain amount of income that you need to be able to show for us to qualify you regarding your debt to income ratio. How much mortgage payment can you sustain in relation to your income? Yes.
Exactly. So first out the gate, I'm not a CPA, I'm not an attorney, I'm a business consultant in the world of payroll. So everything that I do say and talk about, please consult with your accountant and CPA or attorney as well. But yes, no, absolutely. So that first benefit that I was mentioning is that it cleans your finances. That payroll is a very powerful tool, especially when you're again an entrepreneur and a business owner, where it separates your business income from your personal income. Meaning is that, say, I run whatever type of business that I run, right? And I put myself on the books and I pay myself on payroll. Taxes get deducted as I'm paying myself, right? And they get paid to the IRS. That's what the payroll service does.
Okay.
At the end of the year, I'm going to do 2 tax returns. My personal, which you have until April 15th for the most part to get it done.
Which is around the corner. It's coming up pretty quick.
Which is around the corner, right? Unless there's extensions and all these other things. But April 15th is your personal tax deadline, and then March 15th is your business tax deadline for the corporations, for businesses. And so, but basically with payroll, for the most part, at the end of the year, you're going to get a W-2, which, however your deductions and however you do your tax return with your accountant or CPA, for the most part, you get an income tax refund. And then for the business, you're using the payroll taxes as a way to write off losses for the business, okay? And I'll talk more about that in a little bit as well.
Okay.
But what it does is that, again, it shows your W-2, which is huge because that's what the banks look at, right? So say if I come to Sebastian, hey, I want to buy a house, and you're going to ask me,
yes,
well, I need 2 years of W-2s, I need your last 60 days of check stubs, and your 2 years of tax returns, right?
Yep.
Well, the W-2s and the check stubs is the payroll, which is exactly what it is.
Yes.
And so
And let me butt in because this is
Yeah.
great. So basically what we're saying, just to kind of recap, is somebody who's self-employed, let's say somebody who has business tax returns, they're declaring income under the business, but right? But I think the benefit which you're going to go into is if you're paying yourself out of that business income, paying yourself in payroll as a W-2 employee, you're going to get some benefits. It's going to help you.
Absolutely. So the first benefit is that, yeah, it separates your finances. The second benefit is that you become more bankable.
Okay.
Very, very clear.
You're right, because what I look at is tax returns, W-2s, and pay stubs, right? So if you can show me consistency for the past 2 years that you've earned that same type of income, you become bankable.
Absolutely. And then the other benefit, too, is that there's actually some tax benefits as well as paying yourself on payroll. So, you know, how many people do we know that they're called mattress investors, right? That they have money under their mattress, right? I mean,
And does that accumulate or anything, or what does it happen?
I mean, typically, as a mattress investor, nothing. I mean, you're just losing money because
That's
it's there,
right.
right?
And depreciation,
There's
inflation.
depreciation. I mean, everything. But you know what? There's a lot of benefits to it. And actually, I have a little whiteboard here that I want to show everybody.
Okay.
That talks about the tax savings and the tax benefits of paying yourself on payroll.
Guys, so everybody who tunes in every week, we're going one step further here. We're pulling out a whiteboard to now illustrate. I think it's going to be easier for us to understand visually
Yes.
and kind of hear at the same time what you want to show us. So
Absolutely.
please talk to us.
Hey, listen, I'm a big visual person, so I'm about numbers,
Yes.
right, as well. So I want to show you guys just high-level overview of the benefits of putting yourself on the books, on payroll, for tax, retirement, and lending purposes as well. So I kind of have a little chart here. I kind of halfway drew it because I don't want to be spending time writing it down. But let's just put it in just very basic terms here.
Okay.
I'm a business owner, okay? I put myself on payroll. I pay myself $1,000 for this month.
$1,000 a month.
Gross. Let's just say gross.
A month.
Yep.
So $12,000 a year.
Yep, $12,000 a year.
Okay.
I mean, obviously you're not going to get qualified for any loan.
Yeah,
for
no,
that,
but just like it's good.
But for numbers' sake, I just want you guys to see this, and and I want you to be patient with me, okay? At the end, it's going to make a lot of sense. It's going to be the aha moment, okay? So, say you pay yourself $1,000 this month, okay? So there's two types of taxes that gets paid when you pay yourself on payroll. There's employee taxes, which is these four here: Social Security, Medicare, federal income tax, and state income tax, okay? And then there's the business taxes, or also called employer taxes, okay? Because in reality, as an entrepreneur, you're two people on paper. You're the employee, but you're also the employer.
Okay.
Okay? So with the business, you also match the same taxes up here, Social Security, Medicare, but you also pay unemployment taxes, federal unemployment tax agency, and then state unemployment insurance, which is unemployment taxes, okay?
Okay.
So this is all going to make sense at the very end. So I pay myself $1,000. So with the taxes, with the employee taxes, Social Security is 6.2. Okay, Medicare is 1.45. And then federal income taxes, basically it's a tax bracket. You guys can Google it. You know, federal income tax brackets for 2023 and
Depending
so
on your
right?
income bracket, that's what you're getting taxed
So basically,
at.
the more you earn, the more you're gonna have to pay to Uncle Sam, of course.
Yep,
right?
keep him
So-
happy.
Yep. So that's from 0 to roughly 35% for numbers' sake. And then the state of Massachusetts, it's a flat rate. State income tax is 5.0. Okay. So roughly 25%, roughly 20-25, depending on your single, married, dependents, all these other things. Again, go back with your CPA and accountant. But roughly 20 to 25% gets deducted from your check. So if I pay myself $1,000 for this month, okay, gross, as I mentioned, right?
Yep.
$250 comes out of my check
In taxes.
in taxes, roughly,
Roughly, yes,
okay?
it's an estimate, yep.
employee taxes. So we're going to get a net paycheck of $750. Okay, that's your net. Excuse me for my handwriting here.
No, yeah, it's
But we
terrible.
all know this, right? It's like you're working for a company, right? You're working for anywhere else, right? So we know that. The business pays taxes too, payroll taxes. Okay. So Social Security, which is 6.2%, then Medicare, which is 1.45. Okay, and then unemployment taxes, as I mentioned, federal unemployment, which is 0.6, and state, roughly with Massachusetts as a new business, is 2.42.
Wow.
I don't want to get into that, but basically, roughly the business payroll taxes is roughly 10% on top of what you pay yourself under the business.
Okay.
Depending on the entity too, LLC, S Corp, corporation, which that makes a big difference as well. Okay, and I'll get to that here in a little bit.
Okay, perfect.
Okay, so basically it's $100 employer taxes. Okay.
Okay.
So, at the end of the year, this is where the magic happens, okay? You've been paying yourself all year long on payroll, on the books. You're declaring an income for the business, right? You're going to do your tax returns now. It's tax time, right? So, the payroll service, which is what I do, we're going to send you a report that shows how much you paid yourself for the year. which is a W-2. And we know what that is, right?
Yep.
That's your income for the year, right? And then we're also going to send all the different forms that of all the payroll taxes you paid in the business. And there's many different types, but for sake, you're going to get a Form 940 that shows all the wages paid.
Okay, nice.
So a good business accountant and CPA, what they'll do is that with the numbers that you paid yourself for the year, they're going to look at these numbers here, Social Security and Medicare on the business side, okay, and Social Security and Medicare on the personal side,
okay,
as yourself as a person. And what they're going to do is that they're going to basically create a distribution, reasonable salary, right? Which basically you're gonna basically save yourself 15.3% on the taxes of the payroll that you pay yourself on.
So you're saving yourself.
You're saving now. It's not 15.3 in general. It's from the payroll that you pay yourself.
Wow.
Okay.
So that's where you're seeing the savings. I mean, that's amazing.
Yeah. So that's based on what you pay yourself on payroll,
Amazing.
right? And so again, so this only works when you're taxed as an S corporation.
And tell me a little bit. An S corporation is?
Yes. S as in Sam, S corporation. So, not to get into much into detail, again, consult with your attorney on this, but there's many different entities.
Okay.
But the most popular ones out there are sole proprietors, LLCs, and corporations. Okay.
Okay.
With an LLC, there's two types. By default, you're taxed as a sole proprietor, which falls in your Schedule C.
Okay.
And then as an S corporation, which is Form 1120S, that shows all the business income. This only works when you pay yourself on payroll when you're taxed as an S corporation for the business,
important.
which
Okay.
is very, very important. Okay.
Nice.
The reason why is because the way the S corporation was set up is that it allows for profits to flow through, and payroll is the vehicle, the distribution vehicle that basically here's the business, here's me as a person, and payroll is the bridge that connects the business to myself as me putting an income.
Meaning,
Right.
so can you just pay? Can you transfer money from your business account to your personal
No.
account? How does it work? I
Don't do that.
No, why?
No. So many people do that. No, because the thing is that when you do that, you're mixing the money. You're mixing the business money from the personal money. And so the IRS is like, well, I don't know what your business income is. I don't know what your personal income. Pay 40%, right? And then your
get
accountant or CPA is like struggling to like deduct all these expenses, right, to bring your tax bill even lower from 40 to 35 to 30 to 25, et cetera.
Wow.
Ever heard the phrase when they say, save 35% of what you make, put it on a separate bank account so you can pay your tax bill, right? That's one of those things. And so payroll helps you offset that and you get ahead of it by 15.3% of the savings that you pay yourself on payroll. Okay?
Amazing.
So hopefully you guys are still following me here, but here's where it all makes sense right here.
Let's
okay?
put it all together because this is beautiful. And
Yeah.
please, you guys taking notes, make sure you are because this is amazing.
So at the end of the year, right, you do your taxes, cool, right? But there's people that don't have payroll, that don't report an income. Well, when it comes to do your taxes at the end of the year, here's what happens. The IRS is like, well, I never seen any payments from your business on taxes throughout the year or yourself as a person. You got to pay the whole thing at once.
Oh, no.
Pay all of it, right? Which is 25, 35%. There comes that phrase, save 35% of what you save. And you know what this is called? This is called a 1099.
Oh, 1099.
A 1099 is when you pay the whole thing at once, right? Employee taxes and employer taxes. That's what that phrase also is called, self-employment tax, which you pay the whole thing.
Amazing.
So payroll is backwards.
Okay.
Basically, you're paying your taxes, you're reporting an income, you're paying the IRS and the state, which that's what the payroll service does,
Okay.
little by little throughout the year. And then at the end of the year, you're going to get potentially an income tax refund from the W-2, and then you're using all these business taxes as write-offs,
Okay.
which is nice. And so now when it comes for lending, it makes it much cleaner.
So much more cleaner.
Makes it cleaner. So now, when I go to Sebastian and I want to buy a house, he's like, well, send me your W-2s. Here you go. Here's
Yes.
my income. I made 50 grand, 60 grand, 70 grand for the year, et cetera, right?
Yes.
But guys, I just want to put it into perspective and bring to light the tax savings potential in paying yourself on payroll. If you want to know exact numbers, again, consult with your accountant or CPA, because obviously they're the team captain when it comes to your business finances for the most part. A bookkeeper too, right?
Yeah.
I'm just that one piece of the puzzle in terms of when it comes to the entrepreneur and business owner's finances. Same thing with real estate. Same
Yes.
thing. You know, you have different people that are involved in the transaction. I'm on the finance side of things, right?
Okay,
And
okay.
so this is very, very in the very beginning of lending. So
Yes.
do this for 2 years.
Yes.
Report a good income, and then from there it'll help out.
And Carlos, that's a great segue because I think everything you brought to light is important. It's valuable. So especially I have clients, right, and people, listeners who are looking. Let's say they just started their business a year ago, right, or maybe they've been doing Schedule Cs, and maybe this is a little insight. Been doing Schedule Cs only as personal tax returns as self-employed. And 1 year, this year, they're going to do corporate tax returns, right? So does that disqualify, or does that mean that now you have to wait 2 years in order to use that qualifying income for us, right?
I mean, yeah.
No, actually, no. So the good thing is, what we can do, we can use the personal tax returns from the year before, and we can use the business tax returns that you're doing this year, and we can qualify you based on the average of those two. So very important, if you have been doing personal taxes without this structure, you can start it this year and still qualify to buy a house this year. It won't slow you down.
That's awesome.
Right? And then other expenses, like you talked about, right? So on your Schedule C, your 1099s when you're getting them, there's different expenses, different costs that you're putting in there that, yes, it brings down your overall net pay, right? So it's helping you with your tax. It's a great tax benefit. But for me, it actually helps me add to your income, right? So let me explain it a little bit further. Is line 30, if you're self-employed, let's say you have a daycare at home. Line 30 is business use of home. Right? Business use of home is basically you using your home as your business, right? You have a daycare in your basement, you have a daycare in your home, you're utilizing your home as business. There's an expense in there. Maybe you built a new office, maybe you renovated the basement to convert it into the daycare. That's an expense we add on to line 31, which is more income for me.
Yeah.
Depreciation, line 13, is another expense that helps you pay less taxes, and for me adds more income to your overall income, right? So sit down, yes, with your CPA, with your attorney, with a good loan officer, with a payroll expert to make sure that you guys are being put in the best position to make sure that you guys are comfortably, financially, and independent and free to be able to buy that property this year.
Absolutely, man. Absolutely. And so I think that's pretty much it, as far as me talking about the benefits of paying yourself. But yes, absolutely. I mean, it's like anything else in life. It's like going to the gym. This is your financial gym right here, right? I mean, it takes time. Yes, you're going to feel the impact of paying it now, but you'll be so much better ahead. You'll be so much better ahead a year from now, 2 years from now, especially when it comes time for lending. So. And
that's amazing. So, I mean, I think the first step is, reach out, ask questions. I think that maybe just answer, understand your situation and see, if it makes sense, and then, learn what you have to do in order to get onto that path, right?
Absolutely.
So, Carlos, again, no, I appreciate it. This is amazing. I mean, all that we talked about is valuable information. I hope everybody's enjoying it, taking it in, and definitely reach out with questions. But, any last piece of knowledge, any insights, anything that you want to leave us with, all our listeners, but more importantly, what's the best way for people to reach out to you?
Yeah, you can either call me, email me, text me. 617-447-3737, right? Or at my email, c.garcia@heartland.us. Or you can also reach out to me through Instagram or Facebook.
Yep.
Handle is Carlos Garcia, US. No .us, but US. So yeah, I'm more than happy to answer any questions, more than happy to help. And so I also speak Spanish as well. So for the listeners that que hablan español, yo también hablo español también. More than happy to help. So
awesome. No, I appreciate it, man. So again, thank you so much, Carlos. It's been a pleasure,
man.
You, man.
Absolutely.
Yes, absolutely. And guys, thank you so much for tuning into this week's episode of the Real Estate Talk Show, Home Buying 101 with Sebastian Cordoba, Mr. Clear Close. Like it, subscribe it, share it, and I'll see you next week.